Hey everybody, Chris Johnson with Money Morning. We've been talking about the nuclear AI industry for more than a year. You know, companies like NuScale Energy, Oklo, Nano Nuclear Energy. On average, the companies that we track are up 90% in 2025, and Oklo is almost up 300%. So this is why I was excited to get Marc LoPresti from Market Rebellion to join me and talk about the industry and the opportunities that are still there. We're talking second inning in maybe a 9-inning ball game here. It could go to extra innings as well. We're going to explain exactly why and how that demand is not going to go away, including the stocks that are going to benefit from it as well. I also got Marc to talk a little bit about the markets. August and September, seasonality, it turns against the bulls, but it could generate some buy the dip opportunities, including these nuclear AI stocks. And then finally, we talk about his favorite stock in the group and how you can position for some long-term gains. And we're talking 5, 10, maybe even 20x type of returns. Stick with me because it's going to be well worth it. You're going to learn something. Let's jump into it right now. Like I said, I've been looking forward to talking to you about this. We're going to hit one of the hotter areas of the market right now, talk about whether it's speculation or whether this is a fundamental trade, and that is that nuclear AI trade, as I call it. Then I want to get a little bit, maybe 5 minutes, 10 minutes, or we'll call it 7 minutes on the market, because we're entering into that weird period of August where nobody really likes it and everybody goes to the beach. And then I want to make sure we circle back on these nuclear trades and talk about how people can actually position for it. So that cool?
I love it. Let's do it.
Let's go. All right. For those that don't know, let's kind of give them the real baseline story here on what's going on with these nuclear companies. There were headlines just yesterday about us wanting to go to the moon. NASA's going to fast track. I mean, come on. This is the Jetsons. We've got Archer Aviation and Joby flying around, right? Now we're talking about putting nuclear up on the moon. I mean, this is a hot sector. When you look at it, let's back up and let's talk about why nuclear. Why nuclear now? We saw it in 2007. What's so special right now?
Well, let's take maybe even not a 20 or a 40,000 foot level, take maybe 2 steps back and
Let's go.
understand what this is all about, CJ. This is about electrons. We don't have enough of them. That's energy, that's electricity, right? It's the stuff, it's
Right.
August, we're hot, everybody's running their ACs 24/7. Well, guess what, folks? Our voracious demand for AI, our insatiable love for everything that we do on our smart devices, our connected cars. My damn refrigerator is connected to the internet right now.
Yep.
That is all putting a demand not only on the nation's energy grid, which is a mess, but globally. And just to put it into perspective for you, CJ, the latest research that we did at Market Rebellion indicates that we will need in the US in the next 10 years, year over year, of new energy, the same amount that all of Japan consumes now. That's staggering, okay? That's staggering. And if we don't find new sources of it, guess what, folks? It's literally lights out. It's going to be a really freaking hot August in a couple of years from now if we're not able to run those ACs, okay? Why? Data centers. They keep popping up. They're exploding in number and size. The president has done an unbelievable job of reducing regulation, reducing the barriers, encouraging that these data centers get built here. He's announced 1.7 trillion in investment in the U.S. under the Manhattan Project. We can talk about what that is, but it's really all about making sure that we have the power we need to become the global leader in artificial intelligence and cybersecurity. Because, CJ, if we don't, we're screwed because the guys that don't like us very much are going to be in first place. That's what we're
Well,
talking about here.
all those things you just named, your electronics, your Wi-Fi enabled refrigerator, which I got washers and dryers on the Wi-Fi,
Crazy.
right? I mean, it is nuts. So all of those things, list them out. And you can include, your charging for your EV. I mean, throw it all into the basket and we're not giving it up,
Yeah.
period. End of sentence. We're not giving it up. So this is pretty much our evolution of technology and innovation that is now pushing us to figure out something new, right? I mean, that's as simple as it gets. We need more juice. The thing that everybody throws around is the normal, your regular chat GPT interaction. Just that one question takes up 17 times more power than a simple Google question used to actually take up. There's the number,
Yeah.
17 times,
Yeah,
right?
yeah. Stop saying please and thank you to Siri and ChatGPT for God's sake. No, but seriously, it's my 17-year-old daughter talks about this all the time. It's like really, really upsets her. Maybe I shouldn't have had her intern with Market Rebellion this summer. But
Right.
we are literally burning electricity by being polite to the AI chatbots, and to it's absolutely
You know what?
unbelievable.
I got to interrupt you there, though.
Hit me.
I've got a little matrix thing going on in my head right now. Every time I am pretty polite to ChatGPT and all of that, because what if someday, I mean, come on,
I know where
red,
he's
blue,
going with this.
right? I mean, they're going to remember who was. They don't forget. They're going to remember. Anyhow, back to your point, though. Yeah, it's just not going away.
No. No,
All right.
it's not. And
Uh,
I'm a big Taylor Sheridan fan. I'm a big fan of that show. If you haven't seen it yet, CJ, you have to. Landman, right? And there's this now
oh,
iconic scene where the main character kind of explains what's going on here, and we have about 110 years left, okay, of oil reserves that power 80 plus percent of our electricity needs in this country, with no idea what's going to replace that. Okay, why is that relevant to the conversation how we started? Why nuclear? I will tell you why. Because no single source of energy, whether it's coal, solar, all the issues and problems there are with renewables, nuclear, no single source of energy is going to provide that resource for that remarkably increased demand. And it's, folks, it's happening. This is not
right.
science fiction. It is happening. Okay.
Yeah.
So therefore, we have to look at all potential sources of energy, and it is in the nuclear space that we think a lot of the most interesting investment opportunity comes. But that's sort of bringing it all together as to why are we talking about nuclear? This is why we're talking
That's
about
it.
nuclear.
Well,
Yeah,
let's go off down that branch right now.
sure.
When we talk about so it's not even an option, and not to say the nuclear option, but I just said it. It's not even an option. This is not a choice. This is an absolute lead. This is where we're going.
Yeah, of
So when you think about nuclear, we think about 3 Mile Island, and there's a coincidence there because we saw Constellation last year do the agreement with Microsoft
course.
about 11 months ago, and that was kind of that crack, I feel like, where everybody went, oh my gosh, this is going to happen. Now that's Constellation. That is, and obviously that is your traditional nuclear power. You've got a couple of other companies, AEP. I mean, there are more companies than people know about, but there are larger ones that are starting to address specific needs of, let's call it the Mag 7, right? I mean, they are the drivers of this because they're in the seat of that innovation. But there's that other group that people are talking about now, and it's finally becoming a little more mainstream, and those are the SMRs,
Yeah.
right? The small reactors. When you look at the two of these, what's the answer? Or is it both? I mean, you could say both.
Well, it's a little bit of both, but let me tell you what creates the opportunity set for the SMRs, the small modular reactor guys, okay? You can bring the horse to the water, but it's harder to bring the water to the horse, right? And
Come on, you're stealing my stuff
it's the
here.
same. The mountain or whatever. You get there's plenty of those anecdotes. The
Right.
problem is, okay, one of the things also from that famous speech in that Taylor Sheridan Landman, we don't have the transmission lines. Even if we wanted to turn tomorrow to going all
Bingo.
electric, we cannot get the power from the windmills and the solar and the ocean, all that stuff, right, to the data centers where it's needed. So you got a couple of choices. You can take 3 Mile Island, right? You can turn that back on, which of course is part of what that deal is that CCJ announced with Microsoft. That's great.
Right.
But rather than try to get the data centers, excuse me, rather than try to get the power from 3 Mile Island out to where those data centers are possibly across the country, it makes more sense to build the newer ones adjacent, right, to where the power is being created near in a nexus to those large scale nuclear power plants. Okay, great. But you can't always do that. We've got data centers around the country already in a lot of interesting places in states that have been far more, I think, economically forward thinking in advancing benefits to entice companies to build data centers in these locations, to create jobs, etc. And they are not adjacent to your big nuclear power plant. Here's the other
Right.
problem with big nuclear power plants. It's the NIMBY concept, right? You all have heard that. Not in my backyard. as much as we've substantially and significantly advanced safety protocols and procedures so that we don't have another 3 Mile Island slash, God forbid, Chernobyl type of a thing, it's still pretty scary, right? Folks don't
Right.
want to live next door to a nuclear power plant. Okay, but what if you could take a very small amount of enriched uranium, a small amount of enriched uranium that is small enough to not represent a significant health threat, but was sufficient to provide 10, 20, 30 years of power for a data center or a hospital or a school or a large municipal complex. You put that on the back of a tractor trailer, you have a small modular reactor, you could park that thing, plug it in, and you've got safe, economically feasible power for decades. That is the promise, and I use that word purposefully, CJ. That is the promise of the SMRs. And that's why they fill a void that is needed. To your point, it's not an option. That's the name of our latest book, of course. So I'm going to thank you for that shameless plug.
No,
It's
no
not an option.
worries. No.
But yeah, I had to get that one in.
Yeah.
But that is why this SMR thing, by most folks that really understand this landscape, it is real. It is coming. It is not something that we can achieve. That finding a solution to that power demand that we're going to have, that everything that Japan consumes today in new power every year for the next 10 years, it's got to be part of the equation.
And I think you pointed out two things that out of that. First of all, you don't have to lay a bunch of copper. There's no
Right.
extension cords with these. It is simply, we don't have to worry about our infrastructure systems already way, way, way behind and overburdened. So you take care of that. And as you said, that not in my backyard effect is now probably not gone, but diminished at least. And it's down to, it's not negligible, but it's something that people can accept. It's interesting. I saw, we've been looking into this for some time now. Duke Energy. Now you've got down in North Carolina, Duke Energy is talking about getting into the same type of business here. And there you've got data centers that in Western North Carolina, where the land is cheap, water is abundant, and you're starting to see data centers planning. I think it's Apple and Meta are planning on new data centers there. And of course, you've got Charlotte, which is kind of the new tech/finance area in that region. So this is we love convenience.
Texas.
Yeah.
I mean,
Texas is another.
West Texas, like flare gas. Does anybody watching this know how much energy we waste that we have to flare, right, from the
Right.
manufacturing and pumping oil out of the ground? That's why if you see one of those pump jacks, there's a big tall thing that looks like a torch, like from the Statue of
Yep.
Liberty. That's burning off the flare gas. Otherwise, you'd have explosions every 10 minutes all over the Permian Basin and other place that oil is produced.
Right.
We're looking at other companies that are also saying, well, hey, let's harness that. That is literally wasted energy. Let's put the data centers in Texas that's already super pro business, light, favorable taxation, all kinds of potential programs and incentives. And so we see that's another area that we're going to see a lot of these data centers being created where there's that cogen opportunity for
Right.
power. Yeah.
Man, you really are into the land, man. You can also swim in pools around the flares,
Oh,
right?
I'm wearing cowboy boots now, CJ. Just can't see
There
them.
you go. I
Yeah.
love the show as well. All right, you said the word companies, and that gets me peaked, and we got to start talking about some companies
Hit
here.
me.
We already brought up Constellation right now, Duke Energy, AEP. Those are some of the traditional, call them what they are. They're utility companies. They pay a dividend, they yada, 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 yada. Constellation's turned into an absolute, a rock star. It's no longer acting like your traditional utility company. At least it's a nice growth in, let's call it growth and income. I'm looking, it's up 54% for the year right now. But when you start to look at these other companies, and we'll call them because they're not all SMRs, but you've got GE Vernova, right?
Oh, yeah.
Who just gave us earnings last week. GEV is a ticker symbol there. That stock's up 98% for the year. You look at Oklo, OKLO, and everybody can kind of, a lot of people can now associate that name a little more with, Sam Altman, right? You've got somebody who was right at the center of the source. He stepped down, obviously, and it was so that the company could go off and do its own thing, which will bring me to another interesting question in a minute. But I'm going to reel them off. Oklo, let's say Nano Nuclear Energy, NNE. You've got NuScale Power and SMR. These are your 300 and 150% type of leaders. Is there a favorite in the group or a couple? You can have a couple with you and Market Rebellion.
So I like all of those names. Oklo, of course, was the best performer on the NASDAQ of 2025. I
Right.
mean, that one just gave us so many reasons to smile last year. Of course, at Market Rebellion, one of the key things that we do is we identify unusual option activity, which is
Hmm.
essentially the footprints, if you will, folks, of large institutional investors placing really big bets,
Right.
directional bets on whether a stock is going to go up or down using options. We had all kinds of UOA and Oklo last year. Our members and our customers did so well with that. We like that name a lot. It's hard to choose a favorite. And by the way, CJ, in an emerging technology, because let's also be very clear from a disclosure perspective, folks. There is not an SMR right now that is online. There is not an SMR that you could currently plug in
Correct.
to a data center. Okay, we are still talking on average, based on what the CEOs of the various companies that CJ just mentioned, somewhere in the 5 to 7 year range. Now, my hope, CJ, is that Trump's executive order a couple of months ago, which was designed specifically to reduce the regulatory burdens, to reduce the red tape, specifically to reduce the timeline for
Bingo.
approvals, not only of large scale, but particularly for SMRs, are going to benefit that and reduce those timelines. Why? One, I'm invested in these stocks, which is obviously part of my own personal motivation. But two, we need that power not 7 years from now. We need that power like now to support the continued advancement and development of these data centers. So I would say I wouldn't pick any of the three as a favorite. I would invest as we are. I'd invest in all three of them. And anytime you're in an emerging space like this, particularly in some of these companies are pre-revenue or pre-MVP, minimal viable product, if you will, it's virtually impossible, other than through luck, to say this is the one that's going to be the winner, and the rest are either going to fold tent or merge. I'd have a few chips on all of them. The other, and I would have a few chips, as we also suggested in that research report that I mentioned, which I'd be happy to share with your readers, by the way, as a courtesy. The large scale, the CCJs, right? The Duke Energies, the guys that are looking at helping to put back online or even develop new larger scale power plants. And a bonus round for the watchers of this fantastic webinar. What do we need for these nuclear power plants that we don't have a
Come
lot
on,
of?
you're stealing it all.
Oh,
That was
you can
where I
edit
was
that out.
going.
Edit it out. Take it out in post.
No, let's. These need to run on something, Mark. Right? It's just not air. So, what is some of the companies that would actually fuel this somehow? I think fuel is the word I was looking for.
It is. It is. And well,
What?
the fuel, for those of you that are not nuclear nerds like CJ and I, is uranium. And guess what, folks? Just like all the other critical rare earth minerals, we just saw 2 weeks ago an unprecedented announcement from Secretary Hegseth of the Pentagon investing $400 million plus in a company called MP Mining. Nobody had heard of it before.
Yep.
Why? Because where do we get access to the minerals that we need, not only to manufacture all those microchips and smart devices that we love, but also to power virtually everything we rely upon for national defense? Well, guess what? The news isn't good, folks. It's China and other places that probably end in stand. That's
Right.
not a good thing. So this president, this administration, has made a commitment to bring access to these things, these rare earth minerals, back to the United States for economic and
Yep.
national security. Part of that story is uranium and enriched uranium. That's the fuel for nuclear reactors, both large and small. There are a couple of companies that we like in that space. One is, by the way, GE Vernova,
Yep.
GEV, of course, the prodigy of that spinoff of GE into two separate business units last year. Another one is Energy Fuels, UUUU, not
You.
that hard to remember. And the last one, Centrus Energy, LEU. There's also some private companies that are looking at creating some really interesting technologies for enriching the uranium. So getting it is one thing. You got to enrich it and make it into a state that can be used in the SMRs. That's another space that we're looking at, and too early to talk about any of those companies, but it may be the subject of a future research report, and maybe a future podcast with you.
There we
Depends.
go. I'll bug you for it, for of course. Let me go something you've mentioned, obviously, especially with the SMRs,
Mm-hmm.
diversification. I mean, that's a word everybody
Yeah.
hears a little bit. There are a couple of ETFs out there that trade. NLR is one of them. When I look at even the uranium, you can find ETFs. Is that a way? Is that the difference between traders? I mean, I would classify a trader as somebody who likes volatility. I always say traders volatility is a trader's best friend.
It is.
And then, long-term investors, it's kind of the noise. Is that a way to do this, or should people just kind of look at it and say, no, I'm going to buy a basket of these stocks myself?
Yes. So listen, it to your point, CJ, it is a lot. Answering that question is a lot about what is your particular category of investor. If you're a more active trader like me, you don't want to pay somebody else to do what you do, and you can
Right.
probably do better. I'll also say, in complete disclosure, I have not looked carefully at those ETFs. I haven't looked at the fee structure and their portfolio composition. They may be great, they may not. I'm not equipped to
Right.
opine on them right now. Generally speaking, ETFs can be a good way to access a category or a sector like this without having to pick them on your own and to diversify. But folks, with any investment product, understand the risks, understand the fees, understand who the portfolio manager is, absolutely critical. So they can be. Can they be a good way, generically speaking? Can they be a good way for folks that are not active traders to access and get exposure to a diversified portfolio of an emerging sector like this one? Sure. I just can't comment
Right.
on any of the specific ones you mentioned.
Okay, I'm going to come back in just a couple of minutes because I do want to talk markets with you for a minute. So
Okay.
we'll kind of go. We were at 40,000 feet. Now we're going to go to 100,000 feet. I don't know, but I do want to circle back and just get kind of a strategy on some of these nuclear stocks, just a little bit more maybe for the traders out there, like you said you are. Let's talk markets for a couple minutes.
Sure.
We're August 6th, right? And a lot of investors don't know seasonally. And when we talk about seasonal trends, I always call them self-fulfilling trends. I mean, it's kind of that thing where the market looks at it and it can turn into a self-fulfilling thing. People start to get nervous around August. Volatility starts to come in. Volume dries up. All of the things, right? August 6th right now. And it feels like August started that way. I mean, we came in last week on a rough first day of trading, right? When you look at August, what is market rebellion and your view right now on what we're heading into here?
So you make a couple of very good and valid points, CJ. One is the seasonality effect, as the traders call it, which essentially is literally what it sounds like, right? At the time
Right.
of year, what particular season or month are we in, and how has the market, the broader indices, performed historically speaking in that time of year or in that month? And August, unfortunately, well deserved, bad reputation, statistically the worst month for market performance of all the 12 in the calendar year. Why?
Yep.
It's typically been a sell in May and go away effect. There's less people. All the big traders and money managers are in the Hamptons or in the Côte d'Azur or wherever the hell they are. But the reality of it is this: as the algos have taken more and more of the market share away from the individual trigger pullers when it comes to who's actually directing the trades in the market, that's become less relevant. I'm not saying it's time to throw away seasonality. It's definitely something to take into consideration. One of the other things about August that you don't have that theoretically should be positive is all the BS coming out of DC because Congress is, famously on vacation for the month. We have
Right.
no Fed speak in August. It's the one month
Nope.
that the FOMC doesn't meet. They all go to Wyoming and do whatever the hell it is that they do around
They
the
play
campfire.
cowboy.
The cowboy thing again. So
I know.
all of these things factor into the August seasonality effect, which again, statistically speaking, and it's like I don't remember what the exact statistic is, but it's a pretty darn high percentage of years that August is a negative month. Okay,
Right.
we take that into account. We take that into account, as you say, possible self fulfilling prophecy. It's one of those self help gurus. You got to wake up and look in the mirror and say you're a winner every day, because otherwise, if you say something else, you're going to manifest that. Well, that happens a lot in the markets too. If we say
Hmm.
August is going to suck and we come in with a sucky attitude, sometimes that also turns out that way, although the algos don't care. But here's what I'm looking at, okay? And this is what is the most critical for me, taking the seasonality part of it out for a minute. We have not seen the gloom, the doom, the death and destruction that was expected and was prognosticated by folks that appear on certain networks that I am often invited to be on to be the conservative economist punching bag. And I always say yes because it's
Right.
fun because I fight back. We did not see the president's trade tariff tantrum, as like many would call it, bring about a recession. We did not see it take the inflationary effect that was promised by folks that have a different sort of view than I do in terms of how these types of things will play out. What have we
Right.
seen? And we just we're in like rounding third base here in Q2 earnings season. We've got all the Mag 7s done. We've got most all the major retailers done. CJ this morning, man, and I love this because I was on a network yesterday on the soapbox. I won't say which one, saying that the president's tariff and trade plans have not been inflationary. They've resulted in 2 consecutive back-to-back months of budget surplus in this country. Go find out. Here's homework for the viewers when the last time that was. Bonus points if you can tell me. $160 billion, and counting in tariff receipts coming from these tariffs. And as the Shopify CEO said this morning, his earnings were released and that stock was up how
Yep.
much? 20% plus. I haven't looked in the last
Right.
hour. The tariff effect has failed to materialize.
So
Okay?
is this a situation where we're climbing a wall of worry then?
I don't
Is
think
the
it's
market going
no.
up a big wall of worry?
No, I don't think so. We
I mean,
had
that's the
look, we had the Liberation Day panic, okay?
uh-huh.
We had that massive correction after Liberation Day. People freaked out, right? Cats and dogs living together, mass hysteria. And the question was, what would the recovery look like? Would it be a U or would it be a V? And let me tell you, brother, we got the best looking V-shaped recovery I've seen in a long time. All the
Right.
data that I'm looking at, inflation is cooling, the labor market, even with that revision of the jobs report, I don't look at the BLS. I agree with President Trump. They're still, by the way, you know how they get those BLS reports? They
Right.
send things
It's in the mail.
in the mail. And
Right.
I mean, and then people say, why are there inaccuracies? It's like, get it back to us when you can, fill it out whenever you want. Less than 40% of people that get them respond. It's useless data. You know what the
But
data is?
Mark,
Go ahead, go ahead.
the letter says, because I've filled them out before for my company, the letter says, you have to fill it out now under
Sure,
penalty of law.
of course. Yes.
People don't listen. Is that what you're telling me?
I'm
Come
shocked.
on.
I know. You're shocked to hear
Yeah.
that there's gambling
Yeah.
in
Yeah.
Rick's
Yeah.
Cafe. But that's why I look at things like the private payroll report that we got the week before, which was 2x the street's expectation to the upside. Okay. And that is non government jobs being created. Why? We're investing again in this country. We're investing again in manufacturing here. Private sector jobs are being created. The American consumer continues to spend. I have been incredibly impressed by the strength of the American consumer. I think this summer, when we look back at July and August, spending on travel and leisure is going to exceed expectations from the spring by about 1 to 200% is what my guess is based on just what I've seen anecdotally. Those are all reasons why I expect that we'll end the month higher than where we started it. Will there be volatility along the way? Folks, of course, stocks don't always only just go up. And to CJ's point, volatility is the lifeblood of active traders. We can't make money when stocks just kind of
Oh,
do this, right? We buy dips.
right. Right. Speaking of which, that's the biggest trade anymore, right? On the retail investor side, the pandemic taught investors in short term. The pandemic is going to be one of these things. Sociologists and let's call it market psychology people 20 years from now are going to look at this and study it. But that has evolved a whole new era of trading. I
Yeah.
mean, it turned investors into traders. We could pick up our phone and we could say, hey, I want to buy 1,000 shares of XYZ. Or I want to play, the other side of that is I want to jump on my DraftKings and start putting some bets in, right? So the buy the dip, I love that you brought that up because the buy the dip has turned into one of the most, let's call it reliable trades here, right? If something pulls back, I write about it all the time. If I see one of these these SMR stocks pull back 10, 15, Archer Aviation, Joby, these stocks that are in play with speculators, you remember that, oh my gosh, 20, 30%, everybody's going to start to buy them. Is that going to stay that way? I mean, is this going to be a resilient trade into, or a playbook? Let's not even call it a trade. It's a playbook for the next 5 years, or are people at some point going to get burned?
That, I mean, that's a bit of a philosophical question that might be a
I
little hard
know.
to answer.
Well, come on.
But let me tell you, the buy the dip trade has been in place since a bunch of dudes in top hats and tails stood around a buttonwood tree on
They
Broad
were
and
in the
Wall Street.
know.
Yeah, I
Yeah.
mean, let's be honest. You know, Warren
Right.
Buffett, like, you don't try to catch a knife when it's falling, and you
Nope.
don't try to catch a shooting star when it's going to the. You don't chase rallies, right? So the,
Stick with
these
your
are
knitting,
yeah,
basically.
these are fundamental sort of basic tenets, right, of trading and understanding investing in stocks and options, which is our specialty, of course. So, do I think that that's a playbook that will last? I do. I think, to your point, COVID brought a lot of people, and I'm glad you brought up DraftKings. A lot of people who during COVID couldn't bet on sports for obvious reasons,
Right.
they became stock market investors and traders. The advent of Robinhood and Moomoo and a lot of these super retail focused, very easy brokerages on your phone that enable fractional shares and things of that nature. But the biggest growth space, CJ, and I'm talking my own book a little bit here, but the biggest growth space in finance on Wall Street globally, even right now, is options. It is the fastest growing securities market. We went from trading around 8 million contracts a day when my partner John Najarian was making a market on the floor of the Chicago. We've had days in the past couple months that have reached 80 million contracts a day. It's only growing. The option floor, there is an option floor. People don't know this. The option floor of the New York Stock Exchange is actually, other than the film studio component of what the New York Stock Exchange is, and I'm partially responsible for that, the fastest growing trading sector on the New York Stock Exchange floor is their options group. So it's a very interesting place to be, and it's where a lot of money is made and markets are moved.
Love, love, love options. They're one of the most versatile tools out there that most people don't know about. I mean,
Right?
you can do so many things with options. That's another podcast. Now I'm marking up, got to write on my notes here. We're up to 2 follow ups here. All
Oof.
right. Let's one more question because you brought up the Fed here on the market. And then I want to switch over to, we're completely off the notes now, by the way, folks. I want to switch over and go through a couple of those SMRs. But on the Fed, I looked yesterday at the Fed Fund futures. I think we're 93% chance of a 25 basis point drop in September. And then right now, you're actually seeing another drop and another. So 3, and the third in December it's just a little bit. I think we're 52% that we see one there versus the 47 that they hold. Is let's put our little, let's look into our crystal ball. And it's not even a crystal ball. You're writing the script, Mark. Let's get to that Fed meeting in September. And let's say that because right now the market is pricing it in. I mean, that's part of what we've seen over the last couple of days. You see the 10-year coming down a little bit. I mean, people are starting to rely. I don't like it when people rely on the Fed. What happens if Jerome, and I'm not talking about his job, what happens if Jerome Powell comes out and says, hey, we're keeping them where they are? We don't have enough data. And you're seeing a couple of the Fed governors that are now starting to change their position. Neil Kashkari was on this morning on CNBC, and he seemed like, yeah, you know what? We're going to have to look at this and be a little more dynamic. I think what he said that stuck with me is we could drop rates twice and we still have the option of bringing them back up. So they're basically saying we don't have to go down after we've dropped them. What happens there? Do people, cat sleeping with dogs? You already said that. If they don't drop rates, let's say 25 bips in September.
Well, so why don't we start with the following? That CME Fed Watch tool is pretty damn accurate, and it's one that we watch really, really carefully. Let's also contextualize why it is where it is with a September likelihood, whereas just a week and change ago, we were in the 60 handle range in terms of probability of a rate cut in September. It's jobs, 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 right? The Fed
Love it.
has sort of this dual mandate, not to bring everybody back to economics 101, but it has this dual mandate, right? Monetary policy, employment, that kind of thing. I think the very significant and embarrassing revision, not only the miss in terms of the jobs expectation, Friday's numbers, but the revision totaling 260,000 jobs combined from the Bureau of Labor Statistics of the 2 previous jobs reports gave traders a belief that's enough reason to give J-Pow confidence that he can cut in September. Now, we're a long way away from there, thankfully. It's not quite time to go back to school unless you live in South Florida. And the reality of it is, I do not see, unless we get some black swan or maybe even a gray swan event, either in the employment picture or in the inflation picture, maybe some tariff shock that hasn't happened. I think both are low likelihood, right? Based on everything I've said thus far in this interview,
Right.
that we will get that 25 basis point cut in September. If we don't,
Okay.
you'd see a sell off. It's a very simple answer.
Okay.
If the market's got a 90+% expectation something's going to happen, it doesn't happen. Guess what does happen? We get a
Pe-
correction.
People hate uncertainty.
It,
There you go.
it
But
ain't
you
rocket
buy it because
science.
you're heading into October, and then you got, I brought up seasonality.
Yep.
You got the seasonality of that cardiac kid October effect, and just like Joe Burrow coming back, all of a sudden, and I'm not a Bengals fan, by the way, it's a Steelers fan all the way here. But all of a sudden, you've got, a market that's got the tailwind behind it.
That's right.
So, all right, cool. Let's circle back one more time, and this will be the last. We can do this little bit of fast track almost. Let's go real quick here. You named some of those stocks in the SMR area.
Mm-hmm.
Let's do one of the favorites. Pick your one, Mark. What is it?
It's
Gonna
got to be.
force.
It's got to be
Come on,
Oklo. It's
Oklo.
got to be Oklo. It's been so good to us. And like anything else, folks, don't chase it. Right? But buy dips. And why do I think? And I know these things are obviously already really expensive, particularly for early stage technologies, particularly in areas where there's pre-revenue. But here's the deal: we are in barely the first inning when it comes to the alternative fuel sources that are needed to solve that voracious power consumption that we talked about at the top of the show. We are in the very earliest innings, maybe the first inning, maybe second inning at best, in terms of the Trump administration's regulatory lightning, if you will, to enable more of this type of activity to bring these technologies into the market. We are in the early innings of that foreign direct investment that we talked about, part of President Trump's Manhattan Project, 1.7 trillion and counting of investment coming into this country to build data centers, AI data centers and infrastructure. So there's still room to the upside. That name, particularly, also is the most covered from a Wall Street perspective, which also can help. So you forced me to pick a favorite, CJ. I told you I wasn't gonna because I don't want people putting all their chips in one name.
You know what? I'm fine with you picking one. I am on the same name here. This is going to give you an opportunity. I like to always give people an angle on how they can trade something. And I'll just be forthright and give you the fullest of disclosures at all. I'm looking at my screen right now. I've got the January 27s. January 27, 50 calls on Oklo that I bought a while ago. Why don't you tell people that is what that is? January 27, you don't have, not the date, but January 27 is the expiration. It's a call. What's that called? That long-term option.
It's a leap.
There you go. So what is my objective there? A lot of people don't understand what a leap option is. When they hear about options, they think, oh my gosh, I'm buying. They hear about 0 day to expiration. They hear about, something that's basically a tearaway, a ticket. You're looking for that ticket out at, let's call at Belmont or something that's laying on the floor that somebody didn't cash out. That's not the case with my strategy there.
No.
What have I done with
No,
an option like that?
and I got to tell you, the ODTs, the date to expiration. I know how popular they are. I know how much they're growing in terms of the overall market share of options. They are dangerous if you don't know how to use them. They are, by stark comparison to the investment that you made, Chris, they are speculative bets on those zero DTEs. I'm not a fan of them. We don't cover them in Market Rebellion. We don't teach how to trade them. I just think there's far too much risk there. But what you've basically done with that leap as compared to the ODTs, you've made what I think is a pretty shrewd investment on the basis of what you think Oklo's fortunes will be between now and then. And I have a question for you. Is that an instrument that you would ever actually execute on, or are you going to trade that option and sell it or let it expire?
That is why I love leaps, because I have that choice.
That's
At
right.
some particular point, I have the choice, and obviously I have to have the cash. Folks, by the way, he's talking about expiration. That's when I say, hey, I've got this 50 contract, this $50 strike contract, and regardless of the price, if it's at $300 before that third Friday in January of 2027, I get to go and hand my option to somebody, and they have to sell it to me for $50 a share, and I get that difference. So, to answer your question, it's a little bit of yes and no. I take the approach when I look at Joby and when I took a look at Archer. When I take a look at some of these stocks, that it's a little bit of, yeah, I'd like to take this risk. I think this is going to be one of those moonshots. No, you don't want to put 10% of your portfolio.
No.
You don't want to put 5% of your portfolio. But you know what? I can put 2% of a portfolio into a leap option.
Mm-hmm.
And at some point, given that exponential growth on these type of growth companies, they are discovery type of growth
That's
companies. They're
right.
speculative. But if you have one that runs up 400 or 500%, it is at that point a leveraged play.
No
It is a
doubt.
way for me to leverage this upside and still limit my risk. That's the way I look at them. And I don't think it's luck, but I like the longer term view of them as well, because that allows me to play those trends. We talked about volatility and noise, the noise in that volatility. I don't care that much if I'm holding a leap, right?
That's
I
right.
just want to make sure.
Listen, man, you're preaching to the choir here.
Right. I know.
Obviously,
That's why I'm.
obviously, but the power of options, right? They are not the weapons of mass destruction that Warren Buffett once famously called them. Warren is probably the largest option trader on the planet, by the way, which was kind of comical when he made that reference. I think it was about 10 years ago or so in a Berkshire Hathaway investor letter. If you know how to use them, you need, like anything else in investing, get educated first, paper trade first.
Right.
Don't, otherwise you are betting and you're not moving odds in your favor. We're about moving odds in your favor. That's what we try to do
That's exactly right.
at Market Rebellion. And a lot of successful options traders, a lot of them members of what we refer to as the Great Rebel Nation, that are Market Rebellion subscribers, are exclusively, in many cases, leap traders. Why? You don't have to sit in front of a screen, right? So it's
Bingo.
also about how much time do you have to dedicate to trading. A lot of people say to me, I can't trade options. I don't have the time. And I'm like, well, what do you mean you don't have the time? Do you have 15 minutes a day? Can you scroll 15 minutes less of Instagram a day to put another X amount of dollars in your pocket? Of course you can. But then it's about saying, how much time do I have to commit to this, and finding the right type of strategy. And the leap type of strategy is oftentimes for those folks that either don't want to or don't have the time to actively manage a portfolio on a day to day basis. So we like them a lot.
Perfectly explained. Is there another one outside of Oklo that you'd like to hit on, or we're just going to
Listen,
stick with Oklo?
listen,
I
man.
could twist your arm a little bit, man.
I was asked on another show on a network I won't mention last week also to pick a favorite, and I have a really hard time picking favorites. And the host
Don't
said,
worry
"Well,
about it.
she said, well, it's like picking your favorite child." And I said, "Well, that's easy because I've only got one, and she's perfect, so that's not a good analogy." But to pick a favorite that I'd be happy holding on December 31st versus today. And I know I'm going to get slack for this, but it's still Nvidia.
Oh,
Love,
really?
yes,
Earnings
sir.
coming up. So there's the third podcast we're going to put on the schedule.
God damn it.
Earnings are still a little bit out there for
Yep.
Nvidia, right? We saw SMCI come out with their earnings yesterday. Not a good look.
No
We saw
bueno.
AMD, but you know what? AMD's losing this race, so it's not a shock, right? But there are little signs out there, and I don't think it's going to come to fruition here. But it looks like, especially with SMCI, because that's kind of been, as long as you don't include, maybe some irregularities, we'll call them, that happened with the company, or still seem to be ironing out. I mean, you're looking at the spaces. I was explain Nvidia as the engine of the car, and now you've got the body of the car, which are companies like SMCI, Dell Technologies, etc., that are kind of starting to taper off again. That's not a sign of demand for Nvidia. You think they're going to come through and just blow it out?
I think so. First of all, I don't recommend trading earnings. Okay.
Yep.
Earnings tend to
Good.
be a
Good call.
binary event. One of the reasons that we love options is because as compared to stocks, it's a binary event, right? Or I'm selling short, right, which very few
Right.
people do in terms of individual investors. Options give me the ability to play four-dimensional chess, is the way I like to talk about it. Remember, like the old Star Trek episodes from the
Yep.
70s? I can move, I can roll, as it's called, up or back in time, adjust and make changes to my investment, to make changes to the play that I've made as the circumstances evolve and the news evolves. And playing earnings does not allow you to do that. That's why I
No.
said between now and the end of the year. And look, I think, and this is going to bring us back, folks, to how CJ and I started this terrific interview. And terrific not because of me, CJ, terrific because
No,
of you.
it's
It's been really fun to do this. We are underestimating the explosion of data centers. Even with all the crazy talk about Japan and power and everything that I started this with, I do not think, and I'm a data guy, I do not think that we have priced in what the reality is in terms of the explosion in data centers in this country and globally,
yep.
especially if you start to talk about things like, oh, we're going to go back and have a meaningful space program. You have any idea the compute required for
Yeah.
that? Crypto, like it's just so, and there's not another company in the space that has as advanced from a competitive perspective as Nvidia. And here's the last reason, and it's going to be the topic of podcast number 4, and that's quantum computing. There is no major company, chip company, that is as far along as NVIDIA in having a true quantum based microchip in development. So
Oh,
um,
that's a
those,
podcast
those are
because
my reasons. Yeah.
Jensen Wang kind of confused me in January when he said, "Oh, I think
10
that was
years.
a play.
Yep.
That was a play
Dude.
because he brought everybody in the industry down, all the quantum players down, and then what? 2 weeks later, he said, "Oh, we're going to have our first ever quantum computing day at our conference."
Yeah.
That
That
guy, that
one
was shrewd.
pissed me off. I was live with my friend Liz Clayman on Fox,
Yep,
having reported on his Quantum's 10 years out in January, and then, as you say, at the NVIDIA Developer Day. Guess what, folks? Here's the NVIDIA, almost as if it is
yep,
Steve Jobs holding it up. I'm like, son of a bitch.
yep. He nailed it.
He played us all. Smart
He
man.
did. Hey, this has been a great segment here, Mark. You know what? I love that you come on. You're giving people actionable ideas here. I mean, we're talking in depth on nuclear. Just to give everybody, and you've mentioned it a couple times, Market Rebellion. Give them a quick 30 seconds. Let's go.
It's the nation's premier place for independent and individual traders to learn how to master the markets. We teach, of course, options, but also equities, and we have our famous unusual option activity trade signals that are also offered on that platform. You can learn more by going to www.marketrebellion.com.
Awesome. And we're going to offer up one of those reports here as well. All right. Thanks a lot, Mark. I really appreciate this. I'm looking forward to the next time. And I don't say that to many people. Sometimes I'm trying to get them off the stage with the hook here, but this has been great. Great interaction.
Pleasure was mine. Enjoy the rest of your summer, brother. I'll be back on anytime you like.
All right, buddy. Have a great day.
Take care.